Heya Cryptozens, welcome back to the Crypto Overnighter. My name is Nikodemus and we do crypto news analysis nightly at 10 p.m. And keep in mind, none of this should be considered financial advice. And it's Wednesday, March 8th, 2023. According to Bloomberg, the Federal Deposit Insurance Corporation is working with Silvergate Capital. They're working together to find ways to keep those Silvergates open. The FDIC has reportedly been in talks with Silvergate's executives. Sources suggest that one possible solution would be to find investors from the cryptocurrency industry to provide funding as well as increasing Silvergate's liquidity. So, FDIC examiners were given permission by the Federal Reserve to visit the bank's headquarters last week. Silvergate's stock jumped by 2.5% to $5.34 in after-hours trading on Tuesday. This was even after Silvergate recently announced that it would delay its filing of its annual report due to requests from independent auditors and the accounting firm, as well as ongoing regulatory inquiries and investigations. The bank warned these issues may impact its ability to continue operating as an ongoing concern over the next year. Following Silvergate Capital's involvement in a lending scandal, many of its crypto clients announced that they were parting ways with the company. Predictably, Silvergate's share price plummeted by over 50% to an all-time low. Additionally, the bank announced that it would be discontinuing its Silvergate Exchange network, which was used by institutions to transfer funds to cryptocurrency exchanges. Silvergate Capital was once considered the leading bank of the cryptocurrency industry. It had many of the largest firms in the U.S. as its clients. However, the bank's current precarious situation suggests that this is no longer the case. If Silvergate falls, that would be a concerning indication for the rest of the industry. It would also provide regulators with a prime example of the risks associated with the banking sector's involvement in cryptocurrency. And frankly, the possibility of Silvergate entering receivership in the near future cannot be ruled out, because there is a chance that the bank may recover, yes, perhaps through undisclosed capital or a rescue package from an investor. That said, many of its prominent cryptocurrency clients have already ended their relationships with Silvergate. Additionally, the bank discontinued its most appealing product, at least for crypto. They shut down the Silvergate Exchange network on Friday. In order to maintain liquidity, Silvergate reportedly sold billions of dollars worth of bonds at a market loss. That caused it to fall short of regulatory requirements indicating its financial stability. Now, even if Silvergate survives for now, cryptocurrency firms will need to search for alternative banks. Established companies in the industry shouldn't have a big problem doing so. Those with a track record of stable operations might be able to convince banks that the issues surrounding Silvergate were not their fault. However, it's going to be much more challenging for startups, which have historically faced difficulties already obtaining banking services. Federal bank regulators have cautioned institutions under their supervision to be careful, or preferably to seek permission when dealing with cryptocurrency. Rather than calming things down, this will exacerbate the situation. The White House has been monitoring things. President Biden has urged Congress to act. None of this seems to matter, as it's unlikely to reassure banks waiting for a resolution. Meanwhile, on Monday, Dapper Labs stated that it can no longer handle ACH payments because its payment partner has discontinued the service. Now that partner is Circle. In a statement on its public Discord server, Dapper explained that Circle decided to terminate ACH payment processing for all of its partner firms, effective immediately. Dapper Labs said that it uses Circle as a payment partner to handle some types of transactions. This has resulted in the unavailability of the ACH payment method. Circle is also the primary issuer of USDC, which is the second largest stablecoin by supply after Tether. Dapper Labs stated that it is actively monitoring and collaborating with its payment partners to resolve any ongoing issues with ACH payments. For the uninitiated, ACH payments are a form of electronic funds transfer. They facilitate the transfer of money between U.S. bank accounts. It's also a horribly inefficient system, but it's the best gateway to fiat, which is why Dapper Labs is currently attempting to secure a new partner for their ACH payments. they're also exploring the option of enabling withdrawals directly to credit and debit cards. According to Dapper Labs, users can still withdraw USD via wire transfer. They can also use USDC. Now, USDC is available on both the Ethereum and Flow blockchain networks. Additionally, NFTs can still be purchased using credit cards, debit cards, and cryptocurrency. The regulatory response will be influenced by recent events. Bank regulators have issued warnings about crypto, but until now, there has not been a significant risk of contagion from crypto to traditional finance, even despite the fall of FTX and last year's bankruptcy filings. However, Silvergate's situation may be changing this. It's worth noting that Silvergate didn't fail simply because it provided banking services to the crypto industry. It was not the industry's fault. Even a bank run didn't wipe them out. Nevertheless, the bank run caused by crypto firms withdrawing their funds resulted in Silvergate selling off its bonds and becoming undercapitalized, leading it to become closer to receivership. And today, Gemini took to Twitter to reject rumors that it had ended its banking partnership with JP Morgan. Gemini said in a short and simple message that its banking relationship with JP Morgan was still intact. This despite rumors to the contrary, because earlier today, rumors swirled that suggested that the two companies were parting ways. Those rumors were unsourced and apparently unfounded. That said, there has been uncertainty about the future of the relationship between the banking system and the crypto industry in the United States. Regulatory pressure and market outflows following the collapse of FTX have caused banks to decrease their exposure to cryptocurrency assets. This type of uncertainty is what led to rumors about the relationship between Gemini and JP Morgan. Listeners of the show also remember another bank moving away from the crypto industry is Signature Bank. In December 2022, Signature announced its plans to cut its crypto services and to return funds to consumers and to shut down crypto-related accounts. The bank also borrowed nearly $10 billion from the FHLB system in the last quarter of 2022. Crypto companies are being affected by the actions of banks. Binance, for instance, stated in February that it would temporarily stop accepting bank transfers of US dollars. This came after the exchange announced earlier in January that its SWIFT transfer partner, Signature Bank, would only handle trades made by users with U.S. bank accounts exceeding $100,000. And the regulators continue to choke the fiat out of crypto. The UK's Financial Conduct Authority is cracking down on crypto ATMs. They've widened their investigation to East London after working with the West Yorkshire Police to address crypto ATM operators in Leeds. The financial regulator is partnering with the Metropolitan Police and is examining various locations in East London that are believed to have illegal crypto ATMs. In order to comply with anti-money laundering and counter-terrorist financing regulations, all crypto service providers in the UK must register with the FCA. The FCA has stated that none of the registered crypto businesses are authorized to offer ATM services, which means nobody can currently run a legal crypto ATM. Therefore, all of the crypto ATMs in operation in the country are operating illegally. The FCA did not disclose information about the site's number and location, and the FCA may be facing a crisis of confidence soon. It might occur to British citizens to ask whether the FCA is producing the expected results. Nigel Rathis is the head of the FCA. During an inquiry session on Wednesday, he said the agency is unable to develop a regulatory framework for crypto investors that will protect them from all losses. Because while the FCA has the authority to ensure that crypto companies register and adhere to anti-money laundering laws, the agency lacks the ability to protect customers from all financial harm. The Financial Services and Markets Bill is anticipated to become law in April, and while it will grant the FCA more power to regulate crypto, it will not include customer loss protection. According to Rathi, it's impossible to establish a regulatory framework that could safeguard crypto investors from losses or compensate them for those losses. He made it clear that no one should anticipate compensation for their losses. And that really stings, because the bankruptcy proceedings of FTX revealed that around 80,000 UK crypto traders lost their funds as a result of the company's collapse. Adler is the new appointed chair of the FCA. She appeared alongside Rathi at the hearing. Now, Adler believes that the crypto industry requires tough regulatory oversight and needs to detoxify. Up till now, only 14% of crypto companies seeking registration with the FCA have been granted approval. Rathi describes most of the applications as exceptionally poor, and he acknowledged that the agency needs to improve its communication of expectations. On Wednesday, the German financial regulator BaFin said that NFTs are not considered securities, at least not yet. Being classified as securities would mean that they need licenses and money laundering supervision. Simply speculating with NFTs doesn't make them an investment instrument. However, some NFTs could be subject to financial regulations in the future if a large set offers the interest payments. According to an article by officials, no NFTs have been classified as securities in a regulatory sense. However, they did acknowledge that it is possible that NFTs could be classified as securities in the future. If they are, linked services like investment advice or brokerage would be subject to regulatory scrutiny. The article also stated that NFTs are unlikely to count under money laundering laws. Regulators need to consider the stability and integrity of the financial system when making these determinations. The treatment of NFTs has been an important issue for the Markets in Crypto Assets Regulation, or MiCA. MiCA will apply in Germany and the entire European Union in a few years. Regulators must examine the substance of what an NFT offers, not just its marketing claims. The Indian government has established new rules around crypto. So now, companies that trade crypto, sell NFTs, or host crypto wallets for others, they are now responsible for checking for any suspicious money activity. Now, this is the first time they've had that responsibility. This means that company must follow the rules in the Prevention of Money Laundering Act. They also must register with the Financial Intelligence Unit. India doesn't have a special group of people in charge of crypto regulations. However, the Financial Intelligence Unit now has the job of watching over crypto in the country. Before this new rule was enacted, companies that trade crypto didn't have to do things like know your customer checks. That has changed. Now they do have to do those checks. They also have to tell the FIU if they see anything suspicious. They also have to appoint a special person, the Money Laundering Reporting Officer, who makes sure that they follow the rules. Businesses also need to have a program that checks to see if customers are okay to do business with and then keeps records of those customers. They also need to keep records of any crypto transactions. Now, to be fair, in the past, they didn't have anybody to tell if they saw anything suspicious, so now they can tell the FIU. India is president of the Group of 20, and as we've reported recently, India thinks that there cannot be any new rules for crypto unless everyone works together and agrees on those rules. Now, currently, India is waiting for the G20 to produce a paper about crypto regulations from the Financial Stability Board and the International Monetary Fund. This paper is due to come out in September or October. On Tuesday, the French financial markets regulator registered AXA Investment Managers as a crypto services provider. AXA Investment Managers is a part of the AXA Group insurance company. They claim to have 95 million clients in 50 countries. With this announcement, AXA Investment Managers joins Binance, Bitstamp, and Societe Generale in passing the governance and money laundering checks required by French law. Before new European laws come into effect, crypto providers are racing to register with the authorities, because those that are already registered, they will be exempt from the Markets in Crypto Assets regulation for a short period of time. However, a newly passed French law means the domestic registration procedure will become more rigorous starting in January of 2024. On March 8th, the U.S. Commodity Futures Trading Commission held a meeting with the Market Risk Advisory Committee. This meeting was to discuss creating a regulatory framework for digital assets, which is a popular topic these days. The meeting included representatives from the industry, regulators, and commissioners to examine important policy considerations. As a part of this meeting, a panel of industry experts led discussions on use cases of DeFi, blockchain, and distributed ledgers. Commissioner Kristen Johnson stated in a prepared speech that the MRAC will continue delivering reports and recommendations. This includes providing targeted recommendations to address climate-related risks, as well as for creating regulations for digital asset markets. In the current session of Congress, balancing the burden of digital asset regulation may be a point of disagreement among federal agencies and lawmakers. Representative Tom Emmer introduced legislation to limit the Federal Reserve's authority in introducing a central bank digital currency. The SEC also took action against Paxos over the Binance USD token. Meanwhile, the head of the CFTC thinks that stablecoins are commodities. That is, unless Congress gives clear direction some other way. Chair Ralston Benham spoke to reporters after appearing before the Senate Ag Committee. He said that they have to regulate the stablecoin market, even without clear instructions from Congress. Benham believes that there's a good legal reason to consider USDC and other stablecoins as commodities, but this could change if Congress gives different instructions. In 2021, Benham highlighted a CFTC enforcement action against Tether and Bitfinex. This suggests that the CFTC's views on stablecoins differs from the Securities Exchange Commission on another digital asset matter. The SEC recently informed Paxos that its stablecoin BUSD was an unregistered security when paired with Binance. Paxos stopped issuing new BUSD tokens in response. Benham said that fiat-backed stablecoins don't return a profit, so those are commodities. However, he's unsure about algorithmic stablecoins and how they should be classified. Now, I think they should be classified as garbage, but whatever. Chair Benham and Chair Gensler have different opinions on Ether. Gensler believes that Ether is a security, but then again he thinks that everything other than Bitcoin is a security and therefore should be under his control, so do with that as you will. Benham has stated that Ether is a commodity as evidenced by the CFTC's regulation of Ether derivatives. The CFTC and the listing exchange analyzed Ether and determined that it was a commodity. Benham has consistently held this position in the past. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe. Leave a rating or review. And in the meantime, we'll see you tomorrow night.